All right, so closing pretty flat on the day, up 7 bips. Managed to hold above the 60 support for most of the session. There's no downside gap here, so maybe getting a little bit of a top. We do have data coming up tomorrow, and with Trump touring the Fed tonight, there's the chance for that to negatively impact things, especially if whatever discussion he has with Powell doesn't go well. This marks another rejection off of the local wedge here, but failure of that back at 63.75. So still quite a ways to go down before we break out of any kind of bullish consolidation. The dollar ticked up a little bit today, as did yields at the top end of the curve. 10-year moving back above 4.4. 20 and 30 both holding around 495. Correlation breaking down a bit into the end of today. Getting back above the prior lows, especially, which is interesting, especially after yesterday's big move into correlation prior to tech earnings, which were disappointing, a little bit disappointing. Commodities doing okay. Gold, precious metals down, metals flat. Oil up quite a bit, 143 points, a little bit of a bounce back there, especially after it dropped earlier on news that Trump was reopening Venezuela to drilling from Chevron. No bond volatility still. Leverage in the carry trade kind of flattening out into the end of the day, but leverage on the short end is picking up. We are seeing the bond curve kind of fall. Forward yield on volatility staying pretty flat. Skew on the S&P keeps moving up, so not a lot of tail risk hedging. Breadth is getting a little bit narrower here, which generally leads to sell-offs over a given period of time, but stocks above their 20-day moving average catching up very quickly with stocks above their 50. And then we've got a new high for stocks moving above their 200-day average, which is now above where we were back in Jan, Feb. I think the high there was about 56% of the S&P. We just need to 1% above that. Correlation between VIX, cash VIX is still pretty divergent. VIX is very low right now, or VX cash VIX. VIX is at 15.53, but actually up a little bit today. So short-term volatility up a little bit more than longer term volatility, but definitely not a correlated move with VIX futures. Fed fund futures pricing in fewer rate cuts. Now only almost 3 rate cuts by middle of 2026, less than 2 rate cuts by the beginning of 2026. And basically just pricing in nothing for September. Bear steepeners kind of flat. It's not doing much. On the technical side, we broke up above the new all-time high from yesterday, fell back to it. Still a breakout from this wedge, ascending wedge. They're broadening ascending wedge. They probably want to fail back below the trend line, so 63.50 to mark a breakdown, and then 62.90 support. The next upside level that I have, which is out on the monthly, is 64.36. Still quite a ways to the upside. So let's see how the resistance here plays out around the new high on the 70 level, and we'll see maybe if we get a nasty durable goods print tomorrow, we might get a little bit of downside. Today's played out perfectly. Generally, market on close imbalances really only matter if they're $1 billion. And it's basically a coin flip, and now they affect the market. I can tell you, the end of day is going to be, slightly more volatile or slightly less volatile. Do we want to watch the Trump visit at the Federal Reserve Bank? It's currently on right now. Yeah, you guys can go watch it yourselves. Thanks for tuning in, guys. I'll catch you later. Peace.